Hey everybody, this is John and welcome to the free video. I want to show you a quick trade that we're doing on Tesla, and then let's talk about kind of what's going on in the S&Ps right now. I just want you to be aware of it so that you can change your trading style accordingly. So Tesla has had a huge move down on Friday, and then of course a huge move up, 40 points down, 40 points up. And everybody now is, of course, going insane. I think at this point, Tesla needs to catch its breath. The options are way, way overpriced. So I want to show you kind of a low-risk trade that we set up today. You can still set it up. And what we did is we just did an iron fly at the $300 strike price. Okay, so what does that mean? What's the risk? All that kind of fun stuff. So what that means is that we are selling the $300 call and the $300 put with the idea that it's just going to trade sideways for a little bit. Both of those options expire worthless and we keep the difference. Of course, this thing is so volatile and I also want to be able to sleep at night. So, sold the $300 call, sold the $300 put. So we bought the 305 call for protection and then we bought the 295 put for protection. So on something that where the max loss is $5, we're able to sell that at $4.37. So on this trade, essentially on a 10-lot trade, my max loss is about $630 against a max gain of $4,370. Now, realistically, are we going to get that max gain? No, that means it's going to close at $300 exactly on Friday. But on something like this, where if I can sell it for $4.37 and buy it back for $3 or $3, and make $1,300 for very little risk, I'm all for that. So I like this trade. Super simple. So the next thing let's take a look at this too. So I've got a few quick things here I want to cover before I wrap up. And for those of you that are a little newer to the markets, or even if you've been doing it for a while, one of the things we want to recognize right now is that we've just come off a huge monthly squeeze. Okay, monthly squeeze, generally what happens is you get, it's a rest and relaxation period from the last monthly squeeze. And keep in mind, a monthly squeeze, the last time this happened here was in the middle of 2012. And then we had one here in the middle of 2016. And that's about right, once every 4 years. So, at that rate, 16, 17, 8, so we're not going to get another one until 2020. So think of it this way. The last time the squeeze ran out of momentum here, we were chopping around for like 2 years. Okay? And now, here, since we've run out of momentum, we've been, even though we've had a nice little rally here because we've had some like daily and weekly squeezes, I mean, essentially this is the range, and we could expect to be in a range like that for a couple of years, and the potential that during this time we even come down to that 34 period moving average, which is way down here at 24.89. Okay, so just kind of expect that the idea that it's like, oh my gosh, things are going to keep going straight up. We just want to kind of acknowledge that, well, maybe things are going to go into kind of a choppy mode, and we want to make sure that we have the right tools for. So there's two quick things here I want to show you, and I'll go into a little more detail on these later, but. So the first thing is that you are always going to have strong stocks, all right? So right now, Boeing is a strong stock. But even within a strong stock, when you get a squeeze, you'll have a move like this after the squeeze fires off. Now, that may not look like much, but that was a $10 pullback from 374 to 364. And a lot of times that freaks people out, and then they get stopped out, and then they miss actually kind of the big move. And so one of the questions that I've been thinking about is, as we go into kind of a choppy market, is what is the best way to naturally catch these ebbs and flows? Because it's not on a daily chart, like if you're looking at, like, say, at a stochastic and say, okay, it's overbought. Okay, well, that's great, but it can stay overbought for weeks, and that can get kind of dangerous, right? So if you're looking at a daily here, it's just on something like that. It's always an attractive indicator when you first start out, but ultimately, it's not something that's good for timing the ebbs and flows. So now, if we look at the same chart of Boeing, we've drilled down to a 30-minute chart. And I want you to, now it's actually a little, I can tell right now, it's a little hard to see. But if you look right here, if you see at point number 1, you see the number 30 right there on a line. And then at point number 2, you see 30 in a line. And then here at point number 3, you see 240 in a line, and then a couple 3 zeros in a line. All right, and then you come over here to 0.4, there's a 120 in a line, and then 0.5, you've got 240 and 30 in a line. So what is that? Well, this is a tool that actually naturally calculates in real time and dynamically the ebb and flow cycles, okay, that are occurring, and not relying on daily charts. Okay, what's moving the markets, and not the 5-minute charts either, but there's a period of charts in between the 30-minute chart and the 240-minute chart that are essentially nailing all of these cycles. So even in a strong stock like Boeing, when it has a natural pullback, okay, so here you could time it so you could get into the squeeze just when it takes off. But when you see these, you know that it's about to take a pause. So you have the choice now to say, you know what, that's fine. I have faith in Boeing. I'm going to hold through this $10 pullback for the ultimate payoff. Or you could say, you know what, we're sitting here at 373, 374. I'm going to take my profits, and the next time I see the ebb and flow buy signal, I'll get back in and ride it up. All right, so that's one way to use this. The other way to use this is just catching the ebbs and flows even on the S&Ps. So today, this morning, around 10 o'clock, we got an ebb and flow sell signal right there. Again, dynamic live level. It's just saying, you know what, at this point, stocks have a very slim to none chance of going any higher, and in fact are setting up for a pullback. And in fact, the rest of today, we ended up selling off. So that's one aspect of it. The other one is a tool that was developed by Eric, that when I used to work on a trade desk, the guys there trading currencies, they were very, very passionate about 30-minute Bollinger Bands for catching currency moves. And it's something I actually used to do a lot. But over time, I found it just looking at the Bollinger Bands on one time frame, you missed out on so much stuff. I mean, a squeeze will completely override a Bollinger Band. And what helps is to actually look at multiple time frames. Now, if you throw the Bollinger Bands multiple time frames on one chart, it's hideous and in fact is untradeable. So one of the things that Eric has done here is taken this, same thing, so you can have a multiple kind of a Bollinger Band tool, and instead of all those wavy lines, it actually just plot where is the upper band, where is the mid band, and where is the lower band. Now I like to watch 4 kind of key time frames, and you'll see here with COP, we came up to the midpoint, down here to the lower band, and right up to the upper band, and that turned into a solid trade. It's the same thing on the Qs. And what happens on each one of these, it'll match up which one will line up the best. In this case, for the Qs, the 2-hour level. And it'll actually plot the level where the Qs will most likely peter out. So you can see we gapped right into this 2-hour upper level. Boom. From there, came all the way back down to the pivot. All right. And then even today, we actually kind of tried to come back up to that zone. Here we are back here. These things happen dynamically, and they are actually controlling and driving the ebbs and flows of the market today. All right, so what is this? So I'll show you this real quick. This is something that I'm super excited about. I think it's going to set us up for the rest of the year, and it's going to complement everything else that we're doing. I have got a class coming up. You can go to simplertrading.com/method. It'll take you to this page. Now, you'll see a couple of different things here that are going on here. Okay, so this is how this works. The strategy class is going to be on Saturday, October 13th, kind of that same Saturday kind of routine when the markets are closed, and we can do a deep dive in this. Now you're going to see here that there's a quick start guide, the pro package, and elite. So what does this mean? The pro package is the one that includes the strategy class, okay? And what the strategy class is going to be focusing on is how to use these tools to naturally capture the ebbs and flows of the market. And the goal here is compounding the accounts, at anywhere from 3% to 5% per week using stocks and ETFs, and you can actually get obviously more leverage if you're using the options themselves. So why can we do that? Because you have a higher win rate with this than any other strategy that's out there, and your losers, when they don't work, are going to be the smallest you'll ever have, because what we're doing is we're playing the ebbs and flows. We're not trying to hold on for a huge move and having to give it a lot of room. Now that doesn't mean that I'm still not doing squeezes, right? It just means that not only can I use these to time my squeezes better, but if there is a stock that I like to trade like Amazon that's nice and liquid and moves and there's not a squeeze on it, I can come in with this strategy and just trade it and trade it and trade it, and it's just base hit, base hit, base hit. So again, what this is that we're gonna do that 4-hour strategy class on that Saturday, and we're gonna talk about which way to do it. Do you buy the stock? Do you buy the in-the-money call? Do you do a spread? It'll include 3 live trading days, and then there's 2 indicators. It's the multi-range indicator, which dynamically draws those levels like we saw on Boeing, and then the multi-snap indicator, which is the one that brings in multiple time frames of Bollinger Bands and actually plots those levels as a pivot instead of seeing all those wavy lines, and it gives you the ones that work the best. Okay, so that's going to be, anyway, that's going to be pretty awesome. Now, what is this quick start guide? If you are new to Simpler, okay, and you're new to options, all right, and you're just like, oh my gosh, all this stuff you talked about sounds complicated, do this, because what I'm going to do in the quick start guide is I'm going to take you through an options 101 course and what I would call a simpler 101 course, so you can learn our basic setups like the squeeze and all the different ways that we time it and all that kind of fun stuff. So if you're looking at this and it's going, gosh, that sounds amazing and it's over my head, do the quick start course. If you're looking at this and going like, oh my God, I'm all in, take advantage of it. We're also doing for the first 250 people that sign up, you'll get a free ticket to our end of year event, which is the tax loss selling class. And then last but not least, if you like live events, we are doing a 2-day event in San Francisco. And if you'd like to sign up for that, that'll include everything here. All right. So that's what I got. Let me bring up the link real quick again. simplertrading.com/method. This is going to be a great class if you are looking for more base hits, more consistency, and when you lose, the losses are small. This is for you. But what I've also found is it also helps us manage things like the squeeze. You can get more precise entries. You can kind of time the ebbs and flow like we saw on Boeing. And all in all, just something that, you know, I always like, it's like, God, there's got to be a way to make life easier as a trader, less frustration and more consistency, and this is it. All right, have a great night. For those of you that are going to dive into this, looking forward to working with you on the 13th, and I'll see you then.